Shyam Sekhar, Chief Ideator and Founder at iThought, joins in on the show right now to take us through his views. Let's start off first with the indices itself. We're very strongly on the back of good volumes. Funds have turned positive in the month of August. The index is looking extremely well poised to break that, to move itself towards that 12,000 mark. Do you see that happening in the near term?
See, I think as the markets rise, we are seeing more and more retail flows coming into mutual funds. So that is a trend that we have been seeing, and that trend seems to continue as of now. But at the investment level, you have seen within the index, the first move of the index was based on the companies with high public float, the likes of your HDFC Bank, Larsen & Toubro, Inflows, these ITC. These kind of companies help the first up move in the index. But I think that a lot of rotation has happened and in the last month, and that has basically led to the index inching up further. Probably this rotation play is not over yet. There could be still some steam left, and flows will be a major determinant, and I don't think that this market is really running on fundamentals, it is running on flows. So how the flows impact in the future is really something no one can predict. But the fundamentals are improving, but not at the rate at which the market valuations seem to be expanding. That is my basic view on the indices.
Second straight month, FPIs have turned positive in India. Equity infusion of about 1775 odd crores with a debt infusion of 3,414 crores. The other part is, within the GDP fine print, if I were to take a look at it, 8.7% growth came from the construction sector. You had a 13.5% growth in the manufacturing sector from a degrowth on a year-on-year basis. Do you see, implications of that and the kind of interest that's building up for stocks within these sectors as well?
See, firstly, I think that this month-on-month statistical circus is something that can be a big distraction for an investor, because we are a country where you have festivals that keep changing, unlike the West, which has Christmas exactly in December on a particular date, and you have all your festivals in the West are on particular days in the calendar. Whereas we are a country where the festivals keep changing. They keep altering, and they come in one quarter in 1 year and the next quarter in the next year. And then we also have a lot of policy changes, like you had demonetization, then you had GST, and then you are having further changes and tweaks in the GST, which are happening constantly. You are also having a lot of resolution of the insolvency and bankruptcy cases, a lot of onward movement, and all these things are going to ultimately lead to better sentiment in manufacturing and in trade. That is something that one has to take cognizance of. So over a period of 1 year or 2 years, it is probably quite certain that your growth rates are going to pick up momentum rather than lose momentum. But this monthly fluctuations are bound to be there. And I think that one should basically take the long-term trend and then use that to guide our investment thinking rather than looking at the month-on-month trend. While I do appreciate the fact that some of these, like manufacturing, have benefited from base effect, what would you give as the reason for the expansion in agriculture to 5.3%? So there are certain parts of the data which are promising, certain parts of the data which are more optical, but I think that the data as a whole holds reasonable promise, and that is the thing that one.
Right. Shyam, hi, good morning, Neeraj here. So distill this for us, right? I mean, how have you looked at this data from an investor's perspective? What are the takeaways? What within this data suggests to you an inkling of an investment opportunity?
So let me discuss one theme or an idea which I'm only extending from this data. It has already been on my mind, but I'll just discuss it. See, you look at the agricultural growth. You look at the current monsoon. The current monsoon is actually not playing all that well. If you see data, it's not all that well, except in up north in the UP, where you have the sugar belt. In the rest of the country, and especially in the western central India, the rains have not been all that great. This would mean that our sowing is slightly behind, but you have to see this in the context of the MSP, the sowing and the rain. So you are going to have a moderated crop which means that there won't be too much surplus like you had in the previous years. And with the MSP, we are clearly looking at more money in the hands of rural India from December, January of 2018-19. So I think that is one clear pointer that rural economy is likely to do well. Though the output may be lower, I expect the farm incomes to actually go up. If you see the last 2 years, the farmers produced a lot and were punished for being productive. This year, they may produce marginally lower, but I think that they are likely to benefit from the situation. So I think that is one area. Yeah.
No, Shyam, so no, that's a valid point. I just wanted your view, and sorry if I interrupted you, but there are two ways in which the farm income spends could happen, right? You look at the rural economy much closer than most people, and which is what I'm asking you. Do you reckon that the spending will happen on crop protection, agri output moving up, and those kind of spends from the farmer now that his income is going up? Or do you reckon the usual suspects, the likes of two-wheelers, consumer durables, etc., will find favor? Because now electricity is very much a reality in the rural area as well. Slowly but surely, they are all getting consistent electricity, and maybe that only boosts that spend. So which way do you think higher spends could happen?
See, I think rural India will see a lot of durable purchase. I think with the GST also being favorable, the changes in the GST have been very favorable. I think that there will be a lot of investments in electrical products in the rural India. That is one thing that is my top idea in that space. I think that a lot of spending will happen. You see refrigerators, you see air conditioners, all these products, basically I think that people will raise their lifestyle. That is my basic thing. I think two-wheeler is a beaten thing. Most people already have them. At best, they will upgrade or change. But there are a lot of other things in which priorities have not been assigned till now, which will now be assigned. I think that relating to lifestyle and relating to their time management and related to the way they live their lives, I think there will be a lot of changes. I expect a lot of automation in the farms also to happen, and that is one thing. And I think I expect farmers to invest in how they improve their farm practices. So how they, with relation to the soil and stuff like that, there will be a lot of change. And if you look at the kind of incomes that some of the farmers will get, like in sugar, I think that a lot of, there probably you can have a lot of discretionary spends like vehicles and stuff like that. But I think that this year you are heading into a very, very positive, close to the calendar year in terms of farm incomes and disposable incomes particularly. I think that is something actually bad. Subpar monsoon is not a bad thing for farmers. If it's just a little bit below normal, it's actually good.
I just want to pick up a few points and come to the consumption sector with something on the backdrop of what you've said. I mean, while consumption has grown about 8.5%, now that we're looking at the rupee depreciating to a level of about 71, could depreciate further. That could strain the inflation. We're talking about rate hikes in the annual that could probably tighten the money supply a bit. Do you see that much more spending power in the hands of the common man to actually boost this sector further?
See, ironically, the middle class is going to be squeezed. That is certain. I think the middle class had it very good in the first few years of this government. I think the last one is going to be a very painful year because you are having high fuel prices, you're going to have high interest rates.
All right, I think we've lost the feed there from Shyam. Let's just quickly take a look at some movers in the market again. Wipro is still holding tight. We'll come back to Shyam in a bit when we try and fix that feed. He was talking about the consumption patterns that we are seeing and what it means for some of the bigger the bigger names there in the consumption space. Shyam, I believe you were making a point. I'm sorry we lost your feed out there.
Are you there? I can hear you.
Yes.
Sorry. So I think that the middle class, the urban middle class is not going to have it so good this year. So I think that whatever companies gain on the rural side, I am of the view that they're going to be under pressure on the urban side. That is something that is inevitable. However, I think that the weak rupee and the oil have a very typical way of playing on Indian business. I think that this will benefit a few companies. It will put pressure on other companies. So you are going to see a lot of rotation of fortunes. and the stock market will naturally adapt to that rotation. It is inevitable. That's what I think.
In your mind, currently, if there is new money that's going to be put to play, where should it go?
It's a very difficult call, but I would put some money in resources, natural resources.
All right.
Where you are going import substitution, I would put some money in natural resources where you are going to do import substitution. But otherwise, I'm not really. I'm basically of the view that equity investment should be staggered a little bit, and one should look at waiting a little bit.
Interesting. Shyam, the stories of the GST beneficiaries seem to be playing out in patches. Home improvement, for example, just hasn't played out at all. Plywood makers, tile makers, ceramic companies are all saying that, I mean, at least are showing the growth numbers which are single digits, at times less than 5%. So it's not really played out really well. Could that change, or do you reckon the hype around the benefits from the move from the unorganized to the organized was overblown for the construction stroke home improvement space?
Neeraj, I am of the view that the unorganized to organized trade is certain to play out. But I think the culprit here is the hype. I think that we have been a market which is rather narrow and shallow. We don't have too many ideas, and we have shown excessive tendencies to flog ideas. And I think that is what is basically leading to all these problems. We have used this space to invest heavily in our mutual funds. And there, I think that they cannot take even 1 or 2 quarters of underperformance. I think there is bound to be an adjustment when you have this kind of a shift. And it is that adjustment that is happening. Please appreciate that capital flows from the banking system to construction is now virtually shut. So in that scenario, it is very difficult for building materials to keep chugging along quarter after quarter. They were bound to slow down sometime. So you will have a few quarters of slow growth. But having said that, this is a passing phase, and you will see the coming years turn more favorable for some of these companies. But I think that the valuations had run far ahead of their times, and we had imputed certainty of earnings growth, which is not going to happen. And I'm really not clear whether the markets can take that uncertainty. I do expect a lot of selling to happen in this space, and I don't think the last word on that is said yet.